So welcome back, everyone. I believe you're doing fine and well. And this is just a follow-up on what we started last week, the series on chart pattern. Okay, because you've seen me pick trades, you've seen me analyze the market every single morning for the past 3 to 4 months now. June, July, August, September, October. I think it's 5 months. This is the fifth month already. All right. And you see me use every single thing from trend line to RSI indicator to chart pattern. You see me use all of these. And what I'm trying to do right here is to break every single thing down for you to be able to do that as well. All right. So I'm going to break this down into a little bit of chunk. So it won't be long. Okay. I want to make the video just 30 minutes, okay, so that it will be precise. When you're watching it, you can easily enjoy it, and every single thing will be posted on our YouTube channel. Okay, so if you're also watching this on YouTube, you can as well just go ahead and click on the subscribe button, likes, and share with your friend. So without further ado, guys, let's get straight into the video. So what about exactly? This is what I want us to talk about. Okay. So many people in the market don't understand what chart pattern is. And some that understand it don't like trading it. One, because some think it doesn't work. Okay. Some think it doesn't work. It doesn't work. That's what some people think. Number two, some think, okay, it's too simple. It's simple. And number three, something uh some don't just understand it, okay? Don't understand it. Some don't just do what? Some don't just understand it. But I am glad to tell you that it does work and it is not simple. And right here, I'm going to explain it to you the best way possible. Number one, it does what? It does work. Chart pattern works like magic. Number two, it is not simple. Okay? Now, people think it's too simple. They want something too hard. Okay, it is not that simple. Let me put it that way. It is not hard, but at the same time, it is not that simple. The same way trade, it's difficult, sir. It is not. It is not. And that's why that is exactly what I want us to discuss. Okay, it is not difficult. All right. So the last thing is some people don't just understand it, which is why I'm here. So the first thing is it does work, but you need to know how to approach it. You need to know how to use it, incorporate it into your chart, into your analysis, into your strategy to make it work fine. Okay, to make it work fine. All right. Number two, it is simple. Okay, I will tell you it is not simple. Okay, and I will give you so many examples. Okay, I'll show you so many examples in different space, in different strategy, different market, different approach, and all like that. Okay, so I will tell you how to implement it, all right, and how to make the best out of it. Okay, how to make the best out of it, how to make the best out of it. All right, I hope you understand what I'm trying to say. So moving forward, um, let me see what I can do. I'm trying to get some examples. All right, I'm trying to get some examples. Price action, SMC, SMT, any type of example whatsoever. I want to get as many as possible. You understand what I'm saying? So it will make more sense. So all right, it will make more sense. So let me give you an example. Let me show you an example right now. Let me show you an example right now. So this is an example of what's it called? This is an example of excuse me for that. This is a clear example of chart pattern. Okay, this is a clear example of chart pattern. But as you can see, the approach is more like SMC. Okay, it was designed here to trade SMC, isn't it? And I'll tell you why it is like that. All right, I'll tell you why it is like that. All right. So right here, to me, all I see here is more like a triple top. Okay, I have one, I have two, and I have three. Triple tops. And as you can see at the bottom here, we have the neckline. Okay, some people will call this shift, the market structure shift. Because of course, the market was initially bullish, isn't it? And then all of a sudden it started ranging. It gave us three tops. One, two, three. It gave us three tops. And then it gave us multiple bottom as well. It broke out pull back, and then a drop down. Do you understand? Some people will call this a market shift. And of course, and indeed, the market did shifted. But it didn't just shift because it wanted to shift. What happened? It changes direction. Okay. It forms a pattern. There is always a pattern at every junction in the market. There is always a pattern. And it is your job to figure those patterns out. Any type of strategy, you bring it out for me. I will tell you the pattern. This in the simplest way. Like I said, some people think what it is too simple. Some people think it is difficult. And some people don't just understand it. So some people will think, when you say it is triple top, triple top sound easier compared to when it's being compared with breakup structure, fair value gap, as you can see right here. It sounds kind of complicated and kind of fancy when you use all this time. But it's still the same thing. Let me bring you another example. So I know what I'm talking about. So let me show you another example right here. Okay, maybe not that one. I'm trying to get as many as possible before we actually go into the session properly. Okay, into the session properly. All right. Okay, I'm trying to forgive me, guys. There's a reason I'm doing all of this because there's a whole lot of things that sometimes we don't quite understand, and we genuinely need to understand them before we jump into trading. Okay, so we don't miss out on interesting concepts. All right, so we don't miss out on interesting concepts. All right, so let me have this here. Oh, good lord. Okay, I think I don't it. I'm gonna. Oh, okay. I forgot that. Okay, I think, yeah, it is right here. So I believe you can all see the screen very well, right? I believe you can all see the screen very well. So as you can see right here, we have 9 smart money concepts. Okay, we have what? We have 9 smart money concepts. From this concept, I'll be showing you the pattern that I see, the chart pattern that I see based on the chart. And I'm going to be calling it a whole different name, all right? A whole different name. You understand? So from number one, we have what we call order block, right? Order block right here. And this is more like a triple top as well. You can see we have, for sure, before they can say the market is going to fall down, that means it either is coming from the bottom or it's coming right there. If it's coming from the top, then this is more like a range, all right? It's a range, but they call it order blocks. It's a range, and then it fell, pull back, and then we sell, all right? However, if the market is coming all the way from the top, I mean from the bottom right here, okay, if all we originally had was a bullish momentum, then what I would call this is what? A multiple top, more like triple top. All right, triple top and multiple bottom. The market broke out, the market pull back, and the market drop. I'm going somewhere. All right, I'm going somewhere. So if this is the case, I guess this is how I'm gonna say it. Okay. Secondly, we have the fair value gap. Okay, we have the fair value gap. This is more like a market momentum. It doesn't really, it's not a tradable kind of pattern. It's just a term. All right, so we're not going to be talking about it because it doesn't really look like a term. It's just when the market just dropped down without a pullback yet. Okay, like GU, the way GU dropped this money. Okay, it's what we call fair value gap. It was just dropped down. So we're gonna move from there, and then we have supply and demand zone. We don't really have much to talk about this one either because it doesn't look like a pattern. But what I can see here is we have more like an evening star here, candlestick, and we have a morning star candlesticks right here. All right. So let's go to number 4. All right. Let's go to number 4. So as you can see, change your character. I don't know whether that was okay. This is change your character number 4. So change your character number 4. As you can see right here, the market was forming higher highs and higher lows, higher highs and higher lows, and all of a sudden it changes character. Right. This is what I call the left shoulder, the head, and the right shoulder. I have my neckline right here. The market is going to possibly pull back, and I'm going to take a sell trade. Easy peasy. So right here, we have head and shoulder pattern. I'm not saying it's not a change of character. I'm just saying it's a change of character, and at the same time, is what it is head and shoulder pattern. That's what I'm saying. Okay, that is all that I am saying. I'm saying it is a change of character, and at the same time, it's an head and shoulder pattern. Okay, it's a textbook pattern. Simple as that. I mean, it doesn't get much better than this. Okay, it doesn't get better than this. We have the shoulder, we have the head, we have the right shoulder, we have a neckline. I can break out, pull back nicely, and then we take a sell. Easy peasy. I'm very confident that nobody will take a sell right here. definitely you're still going to wait for pullback. Even if you're trading smart money concept, you still got to wait for pullback, isn't it? By 5:40, then I'm going to stop this explanation, but I need to make sure we all understand this. Okay, so these are the shift of structure or change of market shift concept or maybe patterns in the market. Okay, this is another example, but I don't know how many times this trading key zones in forex. I don't know how many times this happened, but it doesn't look like a pattern to me. It doesn't look like pattern. This looks more like something that doesn't happen all the time. Okay, this looks like something that doesn't really happen all the time. All right, man. And I can move on. Yeah, I think I can say this happen. Yeah, it does happen. But the name is a little bit long. The reason why I said it does happen is that last month I was able to trade these on the likes of AU, yeah, Aussie dollar, pound dollar, Euro dollar, and Kiwi dollar. I saw them very clearly. Okay, but I traded them in a whole different ways because right at the top here there was a pattern formed. The market will just drop directly like this and start raging. No, it doesn't happen like that. Even if you check both, just that I don't know what is going on with trading view that is not coming up right now on my chart, on my PC, basically. I don't know why. If not, I would have showed you, I would have showed that to you what I'm trying to say. Okay, I would have showed that to you, okay, clearly here. So these are the kind of pattern that you can also call that are also very relatable to what I'm about to share with you. Let me go ahead and pick one more. Okay, let me go ahead and pick one more and then we'll be done for today. It will be done for today. I don't quite see many. All right. I think give me a minute. All right. I guess I've seen one more. Let me put it right here. This is another example. They call it Fibonacci series. Okay, no. That is not a pattern. That's more like a pullback or a retracement kind of pattern, which is just trading the Fibonacci. But I'm very sure we understand what I'm saying about that one. Okay, so all right, I think this is much better. I just pick another one, let it load up fully so I can share that with you as well. So this is another example. Okay, this is another example. As you can see, this particular one, this is very good. Okay, this is exactly what we're going to be talking about. Okay, you can see now, look at this pattern. This is a mixture of what? Supply and demand with what? Plus chart pattern. Okay, see part. The mixture of what? Supply and demand with chart pattern. Then they are using both of them to do what? To trade trend. Okay, this is better. This is easier to do what? To understand. You will see the market print this out more often than none. Okay, look at the market was started from the top here. It gave us a very nice rising wedge as a reversal pattern because as you can see, the market must have been coming from what? From where? From the bottom right there. Okay, the market was coming from the bottom, and then it reached here. It gave us a rising wedge pattern. It dropped down, pull back, right? I'm definitely not going to take a trade right there because it hasn't broken any structure. And you can see this is the demand zone. Initially, it was used as demand, right? Because right here we have support. So we can call it demand as well because demand and supply is always the same thing as support and resistance. It's just another potato, tomato. You understand what I'm saying? So right there we have those two patterns right there. And then afterwards, okay, afterwards, we saw the market breaking below the demand zone or the support zone and then giving us a very nice resistance, or you can call it supply. You understand what I'm saying now? Okay, or you can call it supply. And then what happened? We start looking for a sell trade around there, and the market dropped down. It dropped down to form a new support or demand. Okay, and then the market went back up to retesting what? Trend line. And then what happened again? It dropped down. Okay, so if you had closed this your sell trade right here, I guess you start looking for another sell trade somewhere around there or here. Or if you're not stable, if you're not comfortable with that, you look for another trade right at the top here. So let me bring out the list of patterns that is in this simple chart. In this simple chart, as you can see right there, I want to name the list of patterns that I am able to see. And the one is that this particular person that drew this did not even mention. So let me start. So in this pattern alone, I'm able to see one, a reversal pattern, and number two, a continuation pattern, which is exactly what we're going to be discussing today. Okay, I see a reversal pattern and continuation pattern. The first reversal pattern that I see is the rising wedge at the top here. Because initially the market was doing a little bit like this. Before it got to the top here, gave us a rising wedge pattern and it dropped. Okay, it dropped down and then it gave us another Continuation pattern, which is the what? The bearish flag pattern. So now we have one reversal pattern, let's say RP, reversal pattern, and CP, excuse me. Okay, RP and CP. So we have one reversal pattern and one continuation pattern right now. Because you can see, this bearish flag pattern is the continuation pattern. Because when the market breaks below it, you wait for some small pullback and you start taking the sell trade right there. Okay, I've explained this before, but we're still going to talk about this in detail as we move forward. And then the market break below the previous support again. And all of a sudden, we see multiple ones, multiple tops. That's two tops. Okay, two tops. Simple as that. It doesn't get better than that. So when you see two tops can stand as a what? Reversal pattern and continuation pattern based on where you see it. Okay, it is based on where you see it. A double top can stand as a what? Reversal pattern, and it can stand as a what? Continuation pattern. So right here we are using it as what? As a continuation pattern. Because one, it is staying below the trend line. Number two, it is formed after a bearish trend. Okay, afterwards, I mean, it is formed in a bearish trend, not after a bearish trend, in a bearish trend. Okay, so we use this as what? Multiple terms. So we have two continuation pattern, we still have one reversal pattern. And then the market came down. If you want to pick a trade when you're trading double top, if you didn't pick the buy here, I mean the sell here, you can pick the sell there. If you are very conservative, you can pick your sell right below here. Okay, you can pick it here, one, or here, two, or here, three, based on your approach, based on how calm you are, based on how patient you are. It's as simple as that. Okay. And then right at the bottom here, which other pattern can we see? We can see an inverse head and shoulder pattern. This is the left shoulder, this is the head, and what? This is the right shoulder. Isn't it? Simple. Now let's typically take a little bit, let's digress a little bit. Is it right here? Yeah. No. Okay, yes, this one, this particular one. Now look at this that I showed you earlier. This particular pattern right here. Don't it look like this one? Okay, it looks like the inverted part, the inverted kind of this one. Okay, it looks like the inverted kind of this. It looks almost the same thing. Exactly, head and shoulder pattern. Inverted. This one is inverted head and shoulder pattern. You can see what I'm saying now. So now, right here, head and shoulder pattern is a pure reversal pattern. You can hardly see head and shoulder pattern as a correction, as a continuation pattern. So we are going to count it among the reversal pattern. And then the market breakout, pullback. And you can see when you had, don't forget the list of things that was done here. Number one, we have chart pattern. Okay, just so you know how interesting it is just to trade chart pattern. Number two, we have trend line. Okay. Number three, we have what? We have support and resistance, or you can call it demand and what? And supply. Number four, what else do we have? I think that is all that we have. All right. We have chart pattern, we have trend line, and we have support and resistance. And that is exactly what they use. They combine these three together and they are trading what with it? They are trading the trend. Okay. They are trading the trend. Guys, I can assure you that if you trade trend, you don't have to worry about anything. All you need to worry about is yourself. How patient are you? How calm can you be? If you're calm enough, if you're patient enough, and you trade, you will love it. Okay? You will do it. You will love it. You will love your trade. You will love yourself. It is much simple and it's one of the simplest things in the world. Trading trend. Okay? Trading what? Trading a trend. It is one of the simplest things in the world. All right. So I'm going to drag another one here just so everybody can see that. And let's go to, I'll just pick another one. I'm going to drag it back up now so you can all see it. All right. And then when the market started progressing to the upside, what do we see here? We started buying from this area, right? And then we see an ascending triangle. Okay, an ascending triangle. The market went up after that. Okay, we have our area of support and resistance again. And then we have another bullish flag pattern and the market bounce off again. By the time we get to this top here, we can also be looking for what? Triple top or head and shoulder pattern or double top. Or maybe last one as what? As edge. Okay, wedge pattern. We're also looking for wedge. So we can look for triple top, head and shoulder, double top, or wedge pattern. For us to take what? A sell trade, a reversal pattern. Okay, a reversal pattern. That is how it goes in the market. Market don't just go up like this and then turn down and start going down like this. At the top here, something will form. I'm not saying it doesn't do this. I would actually say 10% of the time, that's when it does this. I just turn immediately and start coming down. If you go and check gold right now, there's a pattern being formed. At the very top, there it is. If you go and check euro dollar, before it dropped on Monday, on Tuesday, there was a pattern formed at the top. Go and check pound dollar that dropped dead today. Go and check at the top. There's a pattern that was formed. There is always a pattern. You just don't read it or you don't study it. If you study it long enough, you will see the pattern. Okay, that is how to trade, and that's exactly what I will be sharing with us throughout this session. Okay, not today, I mean throughout the series, because it takes a lot of time to actually study, and there are rules to this pattern. Okay, maybe this is the reason why someone said in the on the group that it is difficult, sir. It is not difficult, it's just that you're not following the rules. So let me show you the last example I have there. All right, let me show you the last example. All right, so this is another pattern. I'm going to have to delete all of this that I have done on the chart. Okay, so okay, all right. As you can see right here, also we have some series of patterns. Okay, you can see the market started from the top here, and we come down a new high, right? Then it came down again, it formed a new high. Right at this high here, there is a pattern. If you look at it, the fact that when the market is pulling back, okay, after a lower low, when the market is pulling back, then is either it forms a pattern like a flag pattern, or it forms something like this, double top, or it forms something like what they call it, which other pattern did we see the other time? We can look for something like a triangle, something like this, a triangle. Okay, it might be an ascending triangle or a descending triangle. So it can either look like this. Okay, something it will look like this. Okay, it will look maybe like this. Yes. All right. That is another continuation pattern. So right at the top here, there is a pattern. Right at the top here, there is something. Okay. And you can see right here, this is more like a flag pattern. And that is why many people actually use flag pattern a lot, because when the market is pulling back, most of the time it shows you pattern. And you can see when this other drop happened, you can see what happened right here, right? We have multiple top, isn't it? Yes, we do. So you can take a sell here, one. You can take a sell here, two. If that is not enough, you can take a sell here, three. And you can see right here, we have what we call a flag pattern. Easy peasy. All right. So that is how to trade trends. That's why you always hear me say, I'm waiting for pullback. I'm waiting for pullback. I'm waiting for pullback. People think using trend line is bad. People think using support and resistance is bad. That's the way it's been painted, and it's wrong. They're not bad. That's the way the people we met trading. That's how they actually traded before the advent of all these fancy strategies, all these complicated strategies. Before they were initiated, before they were derived, before they were designed, we all trade our forefathers. I don't want to say our forefathers, but it sounds quite archaic. It sounds quite traditional, but that is how it is. Okay, trading is very simple. It's quite easy as well. Quite easy if you know what you're doing. Now look at this. The one at the bottom here. Look at the one at the bottom here. Okay, look at this one. I want to enlarge it a little bit so you can see what I'm talking about. Look at this one right at the bottom here. Let me clean everything here. If you see what I'm saying now. Okay, this is a bullish example. Okay, this is a bullish example right here. Okay, this particular one, it's a bullish example. And you can see the market started from the bottom here, isn't it? Yes. And then we had a higher high, higher low. Right here, if you use microscope, you see there's a black pattern. The market went back up again and pulled back. So now, right here, we now have what? A flat bottom or double bottom. Isn't it? Yes. And the market went up again. And then it came down. Right here, there is no pattern. Okay, look at that. So the sporadic move to the downside. That's why when you see the market do something like this, you can always guarantee that there's going to be another pullback. Now, this pullback right here, it's a better pullback because it's a flat pattern. And then you can easily take a buy from here moving forward. And you can see at the top here, we have what we call multiple, it's more like a range. Okay, multiple tops and multiple bottoms. And then the market move up again. Okay, the same thing happened here. Higher high, higher low, higher high, higher low. You can see all the pullbacks here are more like a flat pattern kind of pullback. The market move up again. We have another flat pattern. Market move up again. But right here, we have double bottom. Okay. And then the market went up again. You guys know that this was printed by the chart. This was the chart that was just sneaked out. Okay. It could be on the daily. It could be on the 4 hours. It might be on the 1 hour. As a matter of fact, it can be on 5 minutes. Okay. I don't know, but I know this can happen on any type of time frame. if you're patient enough. Okay, so there's no juju, there's no lie, nothing. It is just it is what it is. It is real and it works when you work it well. It works when you work it well. And all you need is three things: you need trend line, you need support and resistance, you need chart pattern. And what I now added to my own is what number one, I added candlestick pattern. Okay, candlestick pattern, and then I added a little bit of technical indicator. Okay, which is RSI and moving average. Okay, RSI and what? And moving average. And then he gave me an A plus setup. That's why I can categorically tell everyone that attend my live session every morning that if you follow my trades and you do exactly what I ask you to do, it will be unlikely for you to close a month in loss. I'm not saying you are going to close a month with 2%, I mean with 5% or 100%. No. But it's very, very unlikely for you to close a month in a loss. Maybe 1%, maybe 0.5%, maybe 2%, maybe 3%, I don't know. But it will be very unlikely for you to close a month in a loss. This is exactly what I will be exposing us to in the next couple of weeks that will be embarking on this. Let me take this away from you. For now, so I will see you on Friday. Please stay safe, trade carefully, and have a beautiful day. I will see you in the next one. Bye for now.